for right now, at least in this market, it's really about minimizing what you're watching. You know, I'm going to have probably 10 watches for tomorrow, but there's going to be 30 things going on in the morning. So it's really, really important. This is a super frustrating market because there's so many things that you want to trade. There's so many things that are running. There's so many things that you're missing. So the key is always to remember, you know, it's better to focus on a few and nail them rather than focus on a ton and either just make small on 10 or 20 different ones or just miss them all because you're focused on too many. It's better just to focus. Even if you just took CGC this morning, you know, that's it. Just focus on CGC. Take everything else off radar. You had a lot of opportunity today. And one thing that I did wrong today was CAT. You know, I started in pre-market. I had a 121 and change starter. And, you know, not that it was size and not that, you know, I was really excited or happy about the trade. I think I just had a little bit of a FOMO. I thought that, like I explained pre-market, I thought that the fact that it had come in so much coming into it, I thought any washout would be a potential rebound opportunity. So with that said, what happened was it took my eyes off of CGC. And CGC could not have asked for a better washout and reversal trade setup at all. If you guys, those that have watched Tandem Trader, you guys probably remember the BlackBerry BBRY setup where I had talked about the beat chart, and the key is really a bunch of red candles, and then you have that day that just absolutely gets, you know, demolished, you know, washes out, gaps down, market sells, market on open orders, blah, 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 margin call, whatever. And as you guys know, people act with emotions. So, you know, you got home last night and you're long this CGC from 37 and you're like, oh no, it was just 58, now it's 38 and I'm freaking out. I got to sell in the morning, and, you know, you sold into the 36s this morning. So, the other thought process and kind of thinking of a big picture plan here was, I made mention of this last night on the video lesson, but, you know, this is a very big, let me get the arrows here. This is a very, very big level. And if you noticed, it closed above that yesterday. And I said, even though it was down after hours, it still wasn't, it closed over this prior low, the 4060s. Even though it went under 40 for a brief period of time yesterday, where it closes really tells you something. So they saved that on the chart. And the same thing today, in my opinion, and I mentioned it last night, but basically any washout, I was thinking that they're going to bring it back to this level. And, you know, that's exactly what they did. It worked out perfectly. But like I said, I only had a small trade on this thing today. And you know, in hindsight, it looks fantastic, but it was a difficult trade, especially if you were kind of off track in the morning. And that's one thing I've told you guys before. I try not to form a bias. I try not to get too involved pre-market, because then my focus goes elsewhere, away from the home run trades. And not necessarily that you should be trading this for a home run, but home run in the sense that it was A+ setup, perfect, did exactly what we were expecting. Lower the better pre-market. You can't ask for a better week open, just literally coming into 9:30 at the lows of the pre-market session, and then it plunges and then snaps right back up. So that was no brainer. Great, perfect trade. And, you know, I suggest to make sure you're locking some in. And if you miss that, that's okay. And you might even, you know, start to get a little short bias though over here until it starts to, VWAP reclaim. But I think the most important part to see here is how, you know, forget all this. You know, this is not for everybody. You might not be prepared. You might not know how to react to this. And it might be too much risk for somebody that's trying to build account. You know, what if it went to 35, 34? Would you have, you know, blown up your account? So if you're not familiar with it, it's best to obviously stay away. It's better for it to start to set up and hold a nice trend. So forget all this. But what I want you guys to see here is nice little VWAP push And again, doesn't mean chase the VWAP break. Not at all. What you want to do is you want to see VWAP start to become the base. And when it starts to become the base and starts to have higher lows, at this point, personally, I like to start to buy dips with a risk based off of VWAP, because now you're back over that level where, pretty much the average price where people have paid today. Shorts are probably in a bind. Longs are up at this point. So they're not, freaking out like they were down here. So most people take their foot off the pedal, as far as like freaking out and kind of let things, grind up. And so at any rate, it did it again. It started to consolidate over this range, and then it finally broke through the prior top. And then you also had the potential of a red to green. So if you guys recall, going back to Tandem Trader and just kind of theories and ideas and concepts, the more things that you have going for you, the sector bounce, the red to greens, the whole and half dollar marks, the more things you can kind of put together, the bigger the audience you're going to have watching that trade. And when you have a bigger audience, you're going to have a much bigger at least a reaction, and a reactive trade off whatever those levels may be. And that could be a 40 break. It could be a red to green move. It could be 52 week high, whatever it may be. The more eyes that you have watching that level, the more, even like, technical traders, when the 50 SMA, 200 MA, whatever, all these things, different crosses, stuff like that. The more times you have, the more people that you have watching it, the better reaction you're going to have. And so that was a very similar situation here, where you've got all these things kind of coming to a head and offering a nice little, breakout. Then also a lot of people look at it and they're like, oh wow, this was just 36 and now it's 40, so it must be a short. And then they get on the wrong side and they get squeezed out. And I think that's what also happened with IGC and MBEV today. Did they really, should they have gone as high as they did, especially over here? Probably not. This was probably just a little squeeze out of everybody that kind of shorted over here and over here. And then the ones that were a little nervous got squeezed out and then, started to come back in. Same thing, IGC. But at any rate, that's the long, kind of, version of this, CGC. Like I said, I had a small trade on it, but it was a big miss because I came into the, market kind of misfocused, and that was my own fault. And, the point that, I was trying to make here is that, there's going to be 30 names tomorrow that are going to be moving. They're going to, get your attention, but the key is just to focus on what you trade best, and what you trade best compared to what I trade best may be absolutely different. And that's okay. The idea is to try to figure out what you're best at, and then focus on just those. And then throughout the day, you're going to find other things to kind of add on. So at any rate, I go through and my main watches, my main interest, on situations like this is, big chart breakouts, big candles, basically dips that are holding. So for example, if you've got, dips along a daily chart that keep on getting absorbed, I'm interested in that kind of thing. I'm looking for, big daily chart type breakouts or, ones with huge candles. For example, PLAG, obviously. I'm looking for stuff like this, CDNS, where, you're testing a very big level tomorrow. So if this were to retest towards these 47s, we might have a little bit of resistance, it might pull back. It might need a day or two and then bust through towards, 48, something like that. But for me, all I care about is range. I'll figure out the why later when I do the scan. All it is technical based. Then I'll go through and I'll put it on and just put my thoughts. And then in the morning, I kind of, carve out, what I should be aware of. I talk to my bio guys, hey, do I just trade it as I see it, or is there something I should know? And things like that. So, let's see. So this is when I when I went through these, I'll move my scan up here in a second, but I went through the gappers and then the dumper scan, and basically dumpers is just stuff that's down 5% today, over 25% range. If there's too many, you can always just change that. You know, on a day like today, you might have quite a bit. You might want to only see certain ranges. Sometimes I have a market down day scanner, which is, you know, over $4 of range. You can change that to 2. You can change that to whatever you want, but it'll at least show you some bigger ranging names, that you might be able to, take advantage of. Personally, for me, I like the 1 to 2 range. And then I look for something that I think might have some type of follow through tomorrow. And that's why I came up with like the PII yesterday and, a couple like that. So, for tomorrow, for my watches right now, I've got, ASTE. And the main reason I have ASTE is because it just got absolutely demolished today. And I really liked the range. I liked how, it kind of rebounded and then it just kind of fell apart. So to me, it's a pretty weak bid. It did have a little bit of, a rebound into close. So basically what I'd be looking for tomorrow is maybe a retest into this VWAP level or 37s, and then look for a continuation of an unwind, because this type of volume and this type of, chart is the type that you might see, do something like, the heck's the name of it? Stitch Fix, SFIX. So you have that one big down day, and then you want to watch for pops the next few days, and then you might have that nice little, unwind. It doesn't necessarily mean that this is going to stay down the rest of the month. But at least it gives you a, idea to look for. And in this case, like I said, I'd be looking for basically where it had a little bit of trouble. So, this level and right around this level, and then obviously VWAP. So, if I'm anticipating it into a push, then you want to make sure that you're okay with whatever size you use to prior resistance. But at any rate, I'd be looking for gap up, $1 to $2, and then fade off maybe $1 to $2 or more. MBev, I was really happy with the range today. I had a couple small trades on that. I had it late day and then I ended up taking it off. I wanted to focus elsewhere, but this should look familiar. Anybody familiar with what this, setup is right here? Ramp up, higher lows, VWAP reclaim, higher lows, and breakout. Yep. Good one, Paulo. ABCD. So, this is a perfect ABCD breakout. And no, it's not, you're definitely not in a market where you want to be buying breakout. The idea is to, for when I'm trading this kind of stuff, I like to buy dips along the way with a set risk, basically off this VWAP. And then if it breaks through this prior high and starts to hold, higher lows and that prior resistance becomes the base, then I like to continue to add into that trade. So at any rate, that's definitely a watcher tomorrow. I think that CGC will actually surprise a few people and maybe get another $1 or $2 upside. So I think a lot of people are eager to short this, which I think is the right play. But what happens with these is it's just a game of numbers. And if shorts are just get in there too fast, too quick, you're going to turn into this situation again. And no, I don't think it's going to go to 6, 7, or 8. But what I do think is that if people are too quick to bet on it going down, then we're going to have a situation where, we do actually go to 550s, 580s, something like that. And it's going to hold just long enough to get everybody out, and then it's going to fall apart. So just be aware of that tomorrow. Because there's a very good chance that, if CGC has a week open, it could have a nice little rally right back up to 42, 43 range. There's no reason why it can't. And then maybe stabilize for a few days. If you go back and look at, Roku, I think, Roku, you can see the big down day, and then it rebounded and then came back, another couple days, and then had the real fade. And the same thing, I think, with Square, where it had the gap down day reversal, and then the dips got bought the remaining days. So I think that should be sort of in your head when you're trading these. So definitely keep Tilray and CGC up when you're trading these. They've been a very good indicator for what's going on. Looks like she's floating down after hours today, TLRY. But anyway, so that's that. Plag I have. I had a bunch today. I had a very high conviction, but again, this was a low quality trade, so it's very difficult. In Traders for a Cause, at Traders for a Cause in Vegas, G4 was talking about, different dials and how high your conviction is and your risk, and, this is, and also the quality of the trade. And so, a situation like this, when you're planning for a potential squeeze and there's the news is mediocre at best. I mean, great. They regain compliance and stuff like that. Really, this is just a game of numbers. It's got almost 9 million shares. It traded, 6 million shares the day that it, halted, and then it opened back up. And, for most, this is no-brainer short. But if there is, I believe, Yahoo says 750,000 float. I think it's somewhere between 750 and a million, whatever the case is. I mean, it's basically traded 20 times the float in the last couple of days. And when that happens, I mean, this is a very low quality play. I had very high conviction on the potential squeeze, and I realized a newsletter got in there, so I had to, take some off and whatnot. But over here, it came back, and I had pretty high conviction, and I missed the sell at 750s, and it pulled back a little bit, and you can see lower high, lower high, lower high. So I was talking to a few people today because they were in it, and they were asking about, adding here and adding here, and I told them that I'd rather buy at, 770s, 780s, $8 because even though that's, paying a buck higher, the chance of buying here and it cracking is not worth the risk to reward, because, you want to be adding to something that is working, that is squeezing, that's doing exactly what you thought. And although it may have worked and it could have squeezed out here, when it doesn't, like you can see here, if you're adding 670s, you've just ruined your average, and then it dumps down 50, 60 cents. So that's just the thought process as far as understanding these low quality plays. You always got to remember that, on these dips and stuff, it's sometimes it's better to be, even though it feels like it's a chase or it feels like it's the opposite of what you typically do. Sometimes it's better to, just be upset that you didn't fill here, but be happy that you didn't, because it's going in your favor. It's going the right way. And with that, you should be trying to, add at that point. And, sometimes I talk about it in the room. It's hard to get a fill, hard to get a fill, hard to get a fill. That's what you want. When you're long something, when it's going, up, that's exactly what you want. And you want you want to be upset that you missed some fills and things like that, because that means it's running away from you. But at any rate, it was fading down and stuff. It started to put in a little bit of a base. So basically, I had some over, this last night. This morning, I saw a nice little bid in there. I bought some out of the open. I liked the risk to reward. And then, I traded some around throughout the day. And then I also had put some back on just small, just because I just felt like it's that type of trade where shorts could potentially be, screwed. So yeah, a little bit lucky with the PR. I mean, again, the PR is nothing like crazy, but the good part is they regain compliance. So there's a good chance that they're not going to, halt like they did the other day, for, no good reason. So that's the good part there. We'll see what happens in the morning. Obviously it's for sure 100% on my scan. Over 8, I think we can really start to get, nutty. But again, these are all thoughts based on, if the trend holds. If it fails, if it stuffs out of the open and it fails, then, you know, forget that idea. That's the other key about low quality trades. You have to, the idea is only as good as the trend holding. So just kind of keep that in mind. AUDC, I really like the daily chart, and I think that this has potential for a multi-day run. This type of action, typically I look for dips. I look for 1180s and then potential red to green, you know, 1250. And at that point, just keep on adding dips as long as the trend holds. So I definitely like how it moved. It had a nice little ramp midday. I did see that, but I didn't want to just chase it. I didn't look into the reason as to why this spike happened midday yet. But it's definitely of interest, and it kind of skipped away from there. So basically 1170s, 1180s is sort of the level that I like, that I'd probably be using with a risk on my initial entry of 1150 range. And then if it starts to grind up and go red to green, then I'd probably be risking 1170, 1180s. So that is that one. AMRN, I mean, we knew this was happening at some point. It was just a matter of time, and it just looks so easy when you look back at it, and even the relative strength today. Had an okay trade on it. I actually was thinking about putting a short on it over here, and it wasn't easy to borrow at my main brokerage today. Typically it is. So I was like, yeah, maybe I'll borrow some, and I thought about it, and by the time I thought about it, it was already pulling back. So there's a good chance that I probably would have shorted, added some, and it came right back up, and I probably would have, you know, protected myself. So I'm not mad about it, but I do want to watch all week opens. I still do think that this could squeeze out 22 to 24, and you know, I kind of feel like somebody knows something. You know, it's been a steady bid since, and you know, there's been all those buyout rumors and whatnot. So you know, one of these days we're gonna just wake up and they're gonna be taken out. CDNS, that was we talked about this a little bit. So nice earnings winner yesterday. We're on a key level on the chart. This might act as resistance, but basically reactive trade for me off of open. So any big gap up, I'd be looking to short for a pullback and then look to join the trend. So if it stays heavy, great. I'll lean on it. If it starts to hold trend over, VWAP after it pulls back in the morning, then I will go ahead and be cautious. If it holds under VWAP, I will lean into it and let it fade off. If it holds over it, I will join trend and let it just keep on ramping towards, you know, 48, 50, whatever it wants to do. DBX, I was prepared for the opposite move today. I was prepared for a potential move, as I explained it, like VICR. I was thinking that we might have, you know, yesterday was the gap up on the news, because typically the news yesterday was a non-event, and, you know, nobody really cares. So I was prepared to look for a gap up. A perfect ideal trade for me this morning was gap up, push on, 1250s, and then look for the fade back. So there was a nice little move, and it kind of put in a top over 1260s, and it ramped back up. So at that point, I was watching for 1250s to basically peak, and it never did. So I never took a trade. You can kind of see the reason why, or at least how the 1250s consolidation here acts as sort of a support point here, and why I would care about that. So the only reason I would want to short that is, you know, this prior base becomes resistance, and then, you know, potentially fade off. But, totally was not prepared for this move. It would have been nice for sure. But the candle's big relative to how it typically trades. So it stays on my scan. If it were to pull back tomorrow, I'd be looking for a weak open, red to green, and kind of like a move like today. Otherwise, I'll wait for it to basically lose trend and fade back. But I think we got another 1 or 2 days worth of a trade in here. especially with this volume surrounding it. So it should be a decent opportunity. MRTX was down on MRK stuff yesterday, as well as NKTR and all the others. So this one had a huge hit. MRK didn't really do anything yesterday, but CLVS was another, TSRO, which CLVS is an upsetting one. This would have been a nice little bleeder. I actually got long for a little bit today, and it ended up failing, so I went ahead and kicked it off. I was up maybe 20-30 cents and then kicked it off for flat. But MRTX, I think that people just reacted to the news yesterday. Probably got, short, get squeezed out today, so I'd be looking for maybe a gap fill and then pull back towards 37. So I like the volume, I like the range, and so it goes on my watch. GPK, like the volume, and big chart unwind. This is the first I look at the intraday chart. So usually when I go through it, I just put all the things that might interest me on watch, and then I go through and look at the intraday chart to kind of see how it trades and whatnot. So this may very well not make the cut just because it doesn't look like it's that friendly of a trader. I mean, you got to be on the right side, and I mean it might. It looks like most of the move was right here, and then late day, and it actually does VWAP held as a peak and a nice little fade off, but it's just not as clean as some of these other trends that we see where they kind of go up and down, up and down, up and down, but hold an overall trend. So I probably will look to see how it trades out of the gate tomorrow and make a decision. I do think that there's going to be probably a 50 to 70, 80 cent trade in it. So I probably will keep it on watch. It just doesn't look like much today. MAC, we went over. YNDX, I told you guys I'm thinking maybe $2 range. And then PII, just yesterday was a big trade opportunity, and then again today, off the open. And you look back at it and, it looks like it shoulda, coulda, would have been great, but I mean, it's difficult. It's difficult to just chase a gap down. After this thing was down here yesterday, 86s, ran all the way up to 98s, pulls back, gaps down $1, or $2, and then just unwinds another, $5, $6. So, I like it for the potential of $2 to $3 more. I don't really have a bias yet, but what I do know is that it's probably going to have a $2 to $3 move in it. Coming in unbiased will help you. Let it do its thing, and then look for the trend to set up. And then once it does, you probably have a nice little trade. Just like you see here, higher lows and starts to go. And same thing here, midday, higher lows, VWAP reclaim. But this is the kind of stuff for these types of charts that I'd be looking for in order to take a trade. But I definitely think that this is going to have more range and a decent trade tomorrow. So top watches, Plag, hopefully it does something crazy. It closed 740s. Sometimes they just print these weirdo prints at the bell, at the 8 p.m. Close. But Plag for potential craziness. Hopefully chat rooms stay out of it. As you guys know, I hate when newsletters there's different types of newsletters, different types of chats, but the ones that will come in and sell within like 2-3 minutes are just never good for any type of squeeze situation, because they just change the tide just like that in 3 minutes. It goes from a situation where there's not too many longs in the name and just literally just shorts left and kind of panicky, to all of a sudden a bunch of longs just come into the trade, which gives an opportunity for shorts to add. Then they panic, they end up cracking the stock, and then shorts end up, getting out. So it's the worst thing ever when they come in. And with that said, there are some that have bigger picture types of thought processes in their trades, and I treat them differently. But the ones that come in and out within a couple of minutes and scalp their members, you know, those ones I hate in any trade that I'm trading. But then so Plag, AUDC, and probably AMRN, and maybe YNDX. Those are probably my top 4 from Scan. And in the morning, I'll turn that into about 2 main watches, plus add 2 from whatever happens in the morning. And those will be my reactive type of trades that, you know, I want to react to out of the open. So for example, today's reactive trade would have been CGC. If you guys remember yesterday, the reactive trade for me was right here on this YNDX, and I explained it on video recap, but this was just a trade that I was prepared for from Scan, knowing it, being familiar with it. Friday it had unwound, it came up $2 basically on air, basically probably short cover, then gapped up $2 per share, and then it ripped $1 on air. So there's gonna be some type of profit taking typically. Not always, but that's the risk that that's worth taking for me anyway, of being wrong. It's not like I'm, you know, going sizing in like crazy. I'm reacting to the move and looking to be able to add into a potential unwind. Obviously I scalped it here and here and re-added and covered. I got the meat of the move, I guess, maybe half the meat, but, you know, it's never perfect. But the other thing too is you can see where, you know, this prior level of support, and pretty much use that as a guide. It's always good to look to the left to predict the right, Michelle, Offshore Hunter says. So if you look at the left to predict the right, it's going to help you kind of gauge interest, gauge the interest as far as the levels that matter, and things like that. So that's the plan for tomorrow. If you guys have any questions, I'll check the lounge or the chat. Doesn't matter. We're after hours right now. So, hopefully that was beneficial, and reach out if you guys have any questions.